What a crazy couple of weeks it's been for SoFi stock. After dropping over 20% last week, the stock rallied back 20% briefly this week, with some analysts saying that the stock is massively undervalued at the current price. SoFi as a company has shown incredible growth quarter after quarter, year after year, and we've finally seen that reflected in the share price towards the end of 2024. But now, market conditions, Donald Trump's tariffs, and a fear of global recession has seen most stocks nosedive. Warren Buffett famously said, "Be fearful when others are greedy and be greedy when others are fearful." Before we get into the video, if you find any value in this, can I ask you to smash the like button? Literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now, I've got a lot of comments over the past few weeks from people saying that they aren't getting notifications for my videos. So if you turn on notifications, make sure you set it to all. If it is set to personalized, then YouTube will decide whether or not you get a notification. You do not want this. Don't let an AI algorithm decide what you will and won't watch. So set this to all. Now let's get straight into it. Now this is a very interesting article on Seeking Alpha, which highlights some very good points. SoFi Technologies, I keep expanding my position with confidence. So first of all, let's try to understand the very basics of what's going on. First of all, back in January, SoFi released strong Q4 2024 earnings. However, this was overshadowed by softer than expected guidance and a broader market panic due to President Trump's aggressive shifts in US policy. Yet the fundamentals and growth prospects of SoFi remain robust. On the bullish side, SoFi's partnerships, such as with Blue Owl Capital and its focus on millennials and Gen Z, position it well for future growth. While the near-term environment is uncertain, the stock is massively undervalued with significant upside potential. First of all, for anyone who missed this recently, SoFi expanded its loan platform business with a $5 billion agreement with Blue Owl Capital Funds. Now, Blue Owl Capital is a leading asset manager with over $250 billion in assets under management. This move marks SoFi's largest loan platform business agreement to date. As it says here, in 2024, SoFi's loan platform business originated $2.1 billion in loans. However, through the loan platform business, SoFi earns fee income to originate loans on behalf of partners while retaining servicing rights. So this is a very low-risk revenue stream, and it fits with SoFi's strategy to diversify revenue streams with less capital-intensive and more fee-based resources of revenue. But what's bigger here is that this represents the single largest commitment for SoFi's loan platform business and is 2x their first commitment. As Anthony Noto has said, "We're thrilled to work with Blue Owl Capital and build on strong momentum in our loan platform business in 2025. So first of all, the major factor that triggered SoFi's 2025 sell-off was the Q4 earnings release. Despite a dual beat against consensus and robust growth across all key metrics in 2024, investors became very cautious due to softer than expected guidance. Now, the pessimism around this is astonishing, considering that the company is still growing at an incredible rate. And I feel that there is a mix of delusional investor expectations for the company, as well as just a complete fear of the unknown regarding the current economic situation. Like, for example, right now the whole market is consumed in extreme fear. And this has been the way for the past 2 months. Contrast this with exactly a year ago when the market was in greed, or back to the beginning of January, which is only 4 months ago, when we were in a state of extreme greed. So things have changed drastically in the market over the past 3 months. However, for SoFi, a 23 to 26% expected full year 2025 revenue growth looks very impressive, even compared to the actual 2024 growth of 35%. As the comparatives are becoming larger, it is natural that the growth rate will decrease. For example, like I said many times over the past year, if we go back to SoFi's maybe 2021 or 2022 figures, the growth rate was huge because the base was so low. Now the company has over 10 million members. Its revenue has ramped up massively. It's not going to grow by 200% anymore. That's just not going to happen. 23 to 26% is impressive numbers. And the adjusted EPS is expected to significantly outpace revenue growth. Even if SoFi delivers the low side of this at 25 cents, it means a staggering 67% EPS growth. Such an aggressive bottom line improvement compared to revenue growth means accumulating operating leverage. Now, there's a lot of talk at the minute about a recession, and something that has fueled SoFi's huge drop in the past couple of weeks is the idea that SoFi could be hurt very badly should the US fall into recession. Now, this is not just SoFi. On a global scale, bank shares have plummeted due to recession fears. Both Citigroup and Bank of America were hit hard. Now, there's a lot of talk that SoFi won't be able to absorb very poor economic conditions. But I just want to take a look back to a year ago, because this is important. SoFi's Q1 2024 earnings transcript. Now remember that this is a time when the market was absolutely flying. Everything was booming. The fear-greed index, unlike being what it is today in extreme fear, it was extremely good and everything was positive. Stocks were hitting new all-time highs, the S&P, the Nasdaq, the Magnificent Seven. Everything was on the up. Everything was setting new all-time highs on a weekly basis. But SoFi's Anthony Noto wasn't getting carried away. I think most people seem to forget that SoFi didn't take big risks in the effort to grow the business. They were very conservative. And Anthony Noto got a lot of criticism from some investors saying that the approach was overly cautious. This is referenced no less than 9 times in this earnings transcript. We've taken a more conservative approach towards originations given our concerns around rate uncertainty and the broader macro climate. Personal loan origination growth slowed to 11% in line with our more conservative approach. We have even more excess capital now, but our stance hasn't changed because that was not the reason for keeping it conservative. We're just taking a very conservative view to make sure we don't go into an environment that we're completely unprepared for. And these same sentiments were echoed again in Q2 and in the Q4 earnings call from only 2 months ago. Now I think you get the picture here. SoFi did not take unnecessary risks and were preparing in case of the worst. And right now the worst has arrived. We're not sure just how bad things will get and nobody knows how far the stock market is going to fall. But I'm quite positive about SoFi because they did not take unnecessary risks that a lot of companies have taken over the past 3 years. And I believe that SoFi will be better for this. Let me know your thoughts about this in the comments below. And SoFi just announced they will be releasing their Q1 earnings report on Tuesday, April 29th. So guys, if you want to see an earnings preview on this in the next couple of weeks, then let me know in the comments. Now, as I said a moment ago, SoFi is working on expanding partnerships, such as the recent $5 billion agreement with Blue Owl Capital to fund its loan platform business. Now, this is a crucial step as it diversifies SoFi's funding sources and reduces its reliance on deposits. Worldwide revenue of fintech industry is experiencing huge growth over the past few years, and this is expected to continue, reaching $141 billion over the next 3 years. While Galileo's partnership with Ascenda back in February is a good initiative that will help Galileo in building stronger relationships with partners and customers, overall, the embedded finance industry is expected to significantly outpace GDP growth over the next several years. As we can see here, the embedded finance market is expected to 10x in less than 10 years to over 1.7 trillion. Now, something that I keep seeing in recent weeks is people talking about lofty valuations for some companies. Now, for the likes of Palantir, which has a PE ratio of over 450, or AMD, for example, that has a PE ratio of over 90, I can see how someone might have this opinion. But I don't understand this argument when it comes to other companies. For example, Microsoft, whose PE ratio is only 31, Amazon, whose PE ratio is 33, or SoFi, which is still at the very early stages of profitability and has a PE ratio of only 24. SoFi's market cap is currently 11.5 billion after falling from its January highs, but the forward PE ratio dynamic looks very bullish, as the estimated 2027 PE ratio is as low as 13.2. And just look at these future earnings estimates. This is incredible growth over the next few years. So what do analysts think of SoFi Technology stock? Well, at the minute, analysts seem to be very divided about the stock. The consensus price target among 16 Wall Street analysts is $12.50, with a high of 20 and a low of just 3. The stock has 4 sell ratings, 6 hold ratings, and 6 buy ratings. But we are yet to get any real analyst updates about SoFi, which is likely to happen as soon as they release their earnings report. So as I said earlier in the video, if you want me to do an earnings analysis video, then leave a comment down below. My pre-earnings analysis videos have been correct all through 2024, and right now we are in uncharted territory with regards to economic climate, so this video will be a huge benefit. As soon as the current video hits 500 likes, I will start working on the SoFi earnings preview. So guys, I hope you enjoyed this video. As always, these are just my opinions. This is not financial advice and I'm not a financial advisor. But if you enjoyed this, then like and subscribe. Follow me on X to stay up to date, and I'll catch you in the next video.